Success in Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You're listening to the Financial Survival Network. It's Kerry Lutz. The date is January 28th, 2015. It's Whatever It Takes Wednesdays with Andrew Hoffman. New day, still the same old good stuff. And it's all happening now. I'll let Andy talk about it, but just as predicted on schedule, it's all falling to pieces. Andy?
Yes.
Hey, who would have thunk other than you? I mean, exactly what you said. You know, the only thing that hasn't fallen into place yet, but I totally believe that it will, and sooner rather than later, but I don't think it's quite ready, is precious metals, and in dollars, precious metals.
Yes. In yen price, gold hit an all-time high the other day. Canadian and Australian within 10% of their all-time highs. Even Euro gold's within 16% of its all-time highs. Same with the rupee. Probably on average, the world is somewhere between 15 and 20% from their all-time highs. But, you know, what it comes down to is on October 7th, okay, it's 3.5 months ago, I wrote an article that was called 2008 is Back with One Temporary Exception. The one temporary exception, of course, is the PPT goose stock markets that hide it. And of course, you know, paper, gold, and silver prices, despite surging physical demand the world round, and even paper prices, as we're talking about, that are surging around the world, everywhere but here. But again, that was October 7th when I was already seeing the global economy in freefall. October 7th. Oil was still in the 60s. I think actually oil was closer to $80 a barrel when I wrote that.
Yeah, correct.
80. And the commodities hadn't plunged. I think copper was over $3 a pound. It's $2.47 this morning, et cetera. You know, it had been before the Greek vote, before the ECB even was talking about QE. It was before the Japanese doubled up on Abenomics. It was before the Chinese bank has gone into hyperdrive with its money printing. This was all before that. And now look where we are today. You know, I talked about how the surging dollar was as positive for U.S. businesses as the gasoline price being considered a tax cut when the whole world is crashing around. The surging dollar couldn't be worse. It causes inflation around the world. It causes massive reduction in the competitiveness of America, which is already not competitive. And you know, I wrote an article last week that was said the most ominous quote of the year when we had the Secretary of Commerce here grumbling about the strong dollar, and then Jack Lew doing the same thing. And sure enough, look at the earnings yesterday. Microsoft, Procter & Gamble, Caterpillar, everyone saying the strong dollar is killing us, which only fuels the final currency war because it just gives another reason why the Fed has to not raise rates, go to negative rates like everyone else is going, and institute QE4. I remember the Fed is meeting in 3 hours from now where they're going to give a statement, and I can only imagine in that room as they watch for 2 days in a row falling stock prices, falling oil prices, falling copper prices, etc. They will start the Yellen reversal I've been talking about today. I guarantee you the language is going to be markedly different from the last few where they pretend everything's fine and that, yeah, we're on track to maybe raise rates. They're going to say we are now worried, and as a result, we're going to be very, very patient about what we do. And that's going to be the start of the countdown to QE4.
Countdown to ecstasy, right?
Yeah. I mean, look what's going around us. I mean, as we speak today, okay, some of the news today, the biggest oil inventories worldwide in at least, I think, 1982. How many years is that? 30 years?
33 years.
Yeah, because they don't even have data going back where the oil inventories were that high. So oil is about to break below the $45 to $50 range into the next level of hell. Greece, today, I think, was its worst stock market day in history as this Surface guy who is a badass who doesn't even wear a suit, who's basically saying we are going to renege on our debts. We have 350 billion euros of debts, and most of it is to the Eurozone. We are going to renege on it. And, I see these stock markets in Europe, higher, and I'm going, I mean, does any anyone remember the derivative stuff? Do you think it all went away? Do they really think the ECB is going to monetize $330 billion euros of losses? Of course not. I mean, it's going to be a catastrophe, and it's going to cause all the other countries that are on the edge to do the same thing. Do people realize that the Italian presidency will start there was a vacant spot, so they have to have a new president. 2 days from now, tomorrow, the 29th, they're going to start the debates. And already they're saying that the Syriza influence is there. I remember Beppe Grillo runs Italy right now. He's the most powerful politician, and he wants out. I mean, Italy is a tornado compared to a zephyr for Greece. I mean, Europe is on the verge of collapse here. As I predicted, it would happen.
Mm-hmm. Hey, but the important thing here, Andy, is that, look, Apple's earnings they made $18 billion the last quarter of the year here, right? Isn't that good news?
And the point is, it didn't get the market going. I mean, after yesterday, look, there's a thing called the pre-FOMC drift, okay? And, the title of my audio blog last night was called Catastrophic Pre-FOMC Drift Failure Portends Yellen Reversal Tomorrow. The pre-FOMC drift goes back, I think it's 20 years, where like 80% of all the S&P's gains come in the 24 hours before Fed statements because they goose the market. I talked about it in 853 points of infamy last month. They even do it at the minutes now. They've been trying all week to get oil to rise. They created a rumor. First, King Abdullah died. Then the Saudi oil minister said oil will be $200 one day. Yesterday, they said the Saudi minister was going to meet with other ministers. And look at this. We're plunging. I mean, it's just not working anymore. Today, Apple, had great earnings. Good for Apple. Heck, I just ordered an iPad because it was free with my miles. And I said, screw it. I don't really care about Windows after all these years. What's the point? The point is, this morning when I was at the gym, the NASDAQ futures were up 70 points because of Apple. And now the NASDAQ's unchanged. I mean, that's how bad it is. This pre-FOMC drift, this might be the worst ever. So you can imagine what's going on in that room right now. And I think the FOMC, I can't imagine how much it costs taxpayers, because I think it's something like 80 or 90 people sit in that room with Janet Yellen deciding how to change a few words in that statement. And they are sitting there, I guarantee you, looking at the screens going, hey, look, oil's $45. Oh, no. Oh, shoot, the Dow lost its gains. What should we do? Should we change the statement? Can we still say we're going to rate? Oh, no, the 10-year rate just fell below 180. We've been holding the line on that all week. I mean, that's how clueless they are. It's no different than the ECB. And, we haven't even talked since we had our last one Tuesday, and now it's Wednesday. Yeah. That was on Thursday. I mean, think about what they did, okay? Even the numbers are immaterial with the ECB. What matters is just how clueless they showed the world that they are. They put out that trial balloon, right? The day before, it literally said Dow Jones reports ECB will do 50 billion euros a month of QE. And when they did it, the euro, which had been in free fall, actually crept back up a little bit. So clearly, in their room with Mario Draghi and his cabal, they said, well, this isn't good enough. We want the euro to really fall, so we got to make the number higher. Why don't we just say, how does 60 sound? Sure. So they did 60. So the point was, they are completely trying, have no idea what to do. And that's why eventually they're going to go to 70 and 80 and 100. And as I said, who is going to eat all these losses in Greece? I mean, the Greek stock market is down 10% today. It's down about 20% just since this election on Sunday. The Greek bond market's crashing. They're saying we're not going to pay you. The first act that the Zerpas guy did as the president-elect, whatever, was to go to the war memorials and say that the Nazi war criminals must pay. I mean, they are going to renege on 300 billion euros of debt. Who is going to pay for this? Is Mario Draghi going to pay for it with printed money? Is it going to be the Fed with their secret swaps where they print money and don't put it on their balance sheet? I mean, it's going to be the greatest QE of all time. And we haven't even gotten to the final currency war aspect. We talked about the U.S. What about China?
Oh, yeah. Yeah, nothing is going right here, Andy, right? I mean, nothing is going right.
And again, I call the Swiss bank announcement, which, by the way, I've been predicting for months. I've been all but screaming it during November that they couldn't handle the peg because their balance sheet was exploding, but no one listens, of course. But I mean, I call that the big bang. The ECB was the bigger bang, where they basically said the largest currency in the world, they're going to hyperinflate it. But the biggest bang Not even more than the Yellen reversal, which we're going to see the beginnings of in about 3 hours. When they start to get more dovish and back off their pretend rate hikes, is when the Chinese depeg the yuan. Because I know the popular mainstream thinking is that, well, the Chinese currency is undervalued. It's going to surge if they depeg it. And even the idiot American politicians say, you're currency manipulators. You're keeping the value of the yen of the yuan too low, and it's hurting trade, et cetera. No, the problem is maybe that was once the case. But the Chinese bubble now is far bigger than anything we've ever seen in history, bigger than even our bubbles, although we have all these derivatives off balance sheet. Who knows how big it actually is with the leverage? I mean, we're talking about the biggest real estate construction bubble in history is collapsing as we speak. They just reported their weakest growth in 30 years, their weakest profits ever recorded, the biggest profit drop. And they got $1.5 billion communist mouths to feed. So I believe, especially because the yuan is still a pretty regulated illiquid currency, that if they depegged it, it would collapse. And they are so angry right now because they are losing market share to people like Japan. The yuan is up 30% against the yen because it's pegged to the dollar, and they are getting killed. So they desperately want a weaker yuan. And sure enough, the yuan is starting to weaken as they're kind of giving the signal that that's the direction they're going. And the more you see the euro go down, and believe me, with Greece and all this, the euro is going down, the more pressure there's going to be on China to depeg that yuan. And I don't think people have the slightest clue how horrible that's going to be. It'll be the biggest trade in history, and it's not going to be the yuan going up. It's going to be the yuan going down, causing the dollar to surge and literally wipe out anything that's left of American industry and cause massive inflation in China. The China price, you think Euro gold is strong. Can you imagine the surge you're going to see in yuan price gold when that happens?
Oh my goodness. I just can't see how the dollar gold price will be able to stay down when all the other gold prices are going up in every currency. It might not happen right now in the next month or two, but by the end of the year, I just see that all the signs pointing to gold having to go up.
Yeah, I keep wanting to write a specific article. I have it in my queue, but there's just too much going on. That's called all they have left is the Dow Jones propaganda average and the dollar price, paper gold price. That's it. Everything else they've lost. They've lost gold in other currencies. They've lost commodities. They've certainly lost oil. They've lost. I mean, there is nothing that they haven't lost. The economy of the world is in free fall right now. The geopolitical issues, the people are fighting back in Catalonia, in Greece. They're losing everything, but they still have been able to, with their algorithms, keep that paper gold price down. I mean, can you imagine today? Let alone on Monday, you have this Sunday night, you have the election in Greece, which they say is unexpected. It couldn't be more gold bullish. They slammed the price. Yesterday, gold comes back despite all their best efforts. This morning, all the reasons why gold went up yesterday. Today are even worse. Oil is lower, copper is lower. The 10-year yield is lower. Greece is having its worst day ever. And still they're capping the price. I mean, it is amazing. But they're not going to be able to hold it for long. The Dow, who knows what they'll do? They'll just print money into oblivion. Will it crash? Will it hyperinflate? Who really cares? But the price of gold, we're going to run out of gold this year. Richard Russell predicted we're certainly going to run out of silver a lot quicker than gold, too.
Oh, you're right about that. And they'll keep selling iPhones, as long as people can charge them on their credit cards around the world, they'll keep selling iPhones. And the only thing you'll be able to buy is iPhones and gold. That's what I'm predicting.
Well, the thing is, there are still positive business stories in a world of 7 billion people. No doubt the Apple operating system is surpassing Microsoft. Apple reports this ridiculously positive earnings, and yesterday Microsoft reported earnings and the stock fell 10%. Microsoft, I have Windows, I think it's great, and I've had it for my whole life, but the fact is that it's changing. Remember 10, 15 years ago, Dell was the undisputed leader in computers.
Oh, yeah. Sure.
Well, I don't even have a Dell anymore. I had 3 Dells and I have an HP. There are changes. Apple has taken over the computer space. It's unquestioned. That doesn't make the world any better. It just means it's good for Apple.
Yeah, well, what I found is, and I have to admit, I bought the thing. I got the big iPhone, And when you get that thing, with the big screen, more so than the Samsung, you really wind up doing most of your internet work on the iPhone, and you use your computer and your iPads or whatever tablet computers much less. So that's why this thing has really taken off. And the one
here's a perfect case in point. Again, we're talking about just generally secular changes, right? I have been writing forever. I've written an article a day for, 10 years, right?
Yeah, sure.
You can't keep up with my stuff. And then I just started doing these audio blogs once a week. I started about 15 months ago.
Right.
Well, this week, if you've noticed, I've done an audio blog every day, and I haven't done writing. And I just realized that based on the feedback, people no longer are on computers anymore. They're all on their mobile listening devices.
Correct.
They're all getting unlimited internet usage instead of 1 gigabyte. And people say, look, it's like, I don't want to do, I want to do other things. I want to listen to you talk while I do stuff. I don't want to have to sit down and read. And of course, for me, it's easier. I don't have to link charts and graphs and tables. I can just stream my thoughts and get more out. So that's another reason why, everyone loves the iPhone and people don't need desktops anymore. Correct. And, look, I just ordered an iPad and an iMac for my wife. Just because they were free with the with the miles.
Yeah.
But we said, what the heck? Do we need to use Windows anymore? Let's move on to the future. I mean, it doesn't matter, right?
Yeah, exactly. Yeah, you totally nailed it. And everything's changing, and the way you work, the way you live, the way you do everything in life is different. And the way you drive. I mean, look, my lifestyle now, I drive a fraction of the miles that I used to drive. I don't need the gas. I'm using less cars, and totally different. So
yeah, that's another reason why the oil price has nowhere to go but down. I mean, I couldn't have been more dead on this. And I'm going to scream it from the rooftops. People could say all they want that it's QE, this, that, money printing. No, we are talking about, I wrote that article. My first article this year was the direst prediction yet. And again, I based a lot of that work on the just absolutely amazing insights of David Stockman. I think he might be the finest, economic analyst in the nation right now. I mean, hands down, he's that good. Mm-hmm. And, just detailing how, look, all of the malformation, or as he calls it, the deformation of the investment world because of decades, particularly this past decade, of money printing and all the financial engineering and securitizing and subprime has created just absolutely off the charts overcapacity in the industrial arena. And nowhere you see it in the oil business. I mean, we have record production now in the world. While demand is falling for the same reasons you're talking about. I mean, when I lived in New York, and I only been here for 8 years, I didn't know a single person who worked from home. I remember we had one friend, this girl who worked for Condé Nast magazine, and she would commute into the city, but she had Fridays off. She could work from home, and we thought that was the most amazing thing. Here, I would say more than half the people I know work from home. Exactly. So this is only going to kill oil demand even more. At a time where the global economy is falling and supply is at record highs. And again, everyone who's producing now, from the shale oil to even the Saudi Arabia with its socialist budget, desperately need revenues. They are going to produce full out. They're going to drive that price of oil into oblivion. And the same with copper and all these other commodities. It's not coming back until it's hyperinflated away, which, that's all bets are off when that happens.
Hey, one other thing is the concept of the solar generator. Okay, you can use it there in Colorado. I can use it here in Florida, in the South and Southwest, right? Look, it's not going to replace the grid for your house, but it combines a battery with solar cells. You can get up to 5,000 watts, and you can power 3 or 4 appliances off the thing consistently. So you take your computers, TV, whatever, off the grid. You're not going to get your AC off of it. Maybe, a few other things. But the stuff that you're using all the time, you can just take off the grid now. And, the future.
But it doesn't cost money. It ain't cheap. I have a friend whose job is solar panel installation. And since the economy got weak, his business is horrible. It is a elective, discretionary purchase. I looked into the cost of it. And of course, anyone who's thinking I'm going to get a generator because I want to be, if everything goes to hell, yeah, everyone will see your solar panels and they'll come attack you. So really, it's, if you can afford the investment, it is definitely an investment, but it's not a cheap one.
No, not cheap, but it's the trend, and these things will go down in price. Yeah. And it's inevitable. There's an inevitability about it, is what I'm saying. And that, too, is going to affect petroleum consumption and natural gas and utilities. I mean, eventually, you're going to be your own little generating station right at home. You can see this coming, right?
Inevitable, absolutely. But it could that trend is a longer term inevitability, whereas the Fed is speaking in 2.5 hours. And it's almost like I almost feel like I can write the script of what they're going to say. I mean, if you gave me because what they do is they take that statement and they basically keep the words there and they cross out a few words. Like they may cross out the word patience and say very patient, that kind of stuff. I mean, this is what it's going to say, so everyone can see. We continue to be optimistic about the economy. However, we do realize that certain headwinds have made it a little more data dependent, to the point where we have to be more diligent in our patience regarding when the next rate hike will be. I mean, it'll be that ridiculously obvious. But, you see, I'm reading Deutsche Bank that says this morning, based on the market expectations, the first rate hike is expected in October. I'm going, wait, October? I thought everyone's bullish about rate hikes. Just a month ago, Janet Yellen said it would only take 2 rate meetings, which would mean March or April before we go. October is the 7th meeting. Yeah. So, I mean, the reason I said I'm so confident about this is, aside from everything's falling apart, there's been no peeps anywhere. It's been a choreographed game that started in April 2013 with that closed door meeting with Obama and the too big to fail banks. They smashed gold and they started talking about tapering. It was a game. We're going to keep the stock market up. We're going to smash gold. We're going to manage every market on a daily basis. We're going to mess around with the unemployment report so that people think that we're eventually going to be able to raise rates and sell the bonds on our balance sheet, and it'll be a self-perpetuating recovery. But the fact is, it hasn't worked out that way. And right now, it's at the point where everyone knows it, and they can't lie anymore. Remember in December at the meeting, they said, oh, well, the oil price dropped. That was transitory. And that was when oil was $15 higher than it is today. They also said, quote, other factors were transitory. And I'm going, you mean like the Greek crisis, like Swiss, like Europe, like our economic data going to hell, like the Ukraine? Are these all, quote, other factors that are transitory? No, it's being called out right now. And I predict that by the next meeting, which is in March, the expectations for a rate hike won't even be on the board anymore. It'll be more about when are we going to NERP, since ZERP hasn't worked. I mean, you realize that Switzerland right now, I think the 20-year bond is now at a negative interest rate because everyone's expecting all this inflow of money. It is insane how close we are to the end and how anyone is not protecting themselves with real money with all this paper floating everywhere is beyond me.
Yeah, agreed. The end is near. Be prepared. And go to milesfranklin.com. Subscribe to Andy's daily, I was going to call it a missive, but now it's an audio blog. Bill Holter's work. And go to financialsurvivalnetwork.com. Sign up and get our free newsletter. While you're at it, take a look at the site. We're getting news from all over the place and unvarnished news. None of the mainstream media tripe. And Andy,
yes,
we will talk to you next week. Be well.
Thank you. You too.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.